Hey fellow traders, Philip Tiger from Stock Market Strategy. In this video I'll tell you about candlesticks, or at least the candlestick we use in our trading. We only use a few of the ones that exist. But I do have an advice when it comes to general candlesticks, and that is candlesticks are only short-term tools. That means they show you something at that moment that is important, either reversal or continuation, but it's a short-term tool. It does not take trend into consideration or support resistance. So I use them only for pinpointing entries, and then I use other technical analysis or chart analysis for trend. So how do you use these candlesticks? Well, we use them at support resistance, and we also use them at entering a small retracement or pullback in a bigger trend. So for example, we have a big downtrend and we then rally a little bit, and then we see this candlestick pattern. That could be our signal. We don't use that candlestick to say we want to go short. No, it's the big downtrend that tells us we want to be short. The big downtrend gives us our bias, which is short. We just use the candlestick to pinpoint the entry to get a good risk to reward. So the two different types we use are bullish and bearish, of course, but then we got the hammer and we got the bullish engulfing. And for short entries we're using the shooting star or the bearish engulfing. The hammer is a positive candlestick, if you can say it like that. It shows that the buyers are coming in, and you can see that because we open here, price, and then the price moves down, but then the buyers come in and push the price up, and a perfect hammer would be one that closes positive. And when it does that, it shows that all the sellers that push the price down are now underwater, and now they are in trouble, and the bulls are taking control. So a hammer is a bullish candlestick. But here's the thing, when we say a perfect hammer is one that ends positive, well, that's because either you can follow theory 100% and go a hammer needs to be green, or you can take a trade when you get a hammer that might not be perfect, but everything else is perfect, such as support and trend and other things. So sometimes you have to allow yourself to take a hammer that is not perfect, because the other conditions that are being met is just perfect. So you buy it when the price closes above the hammer. That means the next candlestick which closes above the high of this hammer, and a stop will then be below the hammer. Let me show you on a chart how that looks. Here you got support coming in. You can see all this consolidation over here, and that often acts as support, especially when we have seen a move that is like this, like vertical up and vertical down. Here the sellers are exhausted. They come into support and they've been dropping a lot in vertical drop, meaning simply can't break through without a break. I'm not saying it will not break down later on, but when you then see a hammer, that's the exhaustion that you should go in. This hammer is a bullish hammer. We can go in using this as a trigger for the entry, but it is our analysis that tells us we should buy the support here and the vertical drop, believing in the support will hold, that it cannot keep dropping like this. So this is how a hammer looks in real trading, and again it's just a trigger. It is not your entire analysis. Then the opposite is the shooting star. The shooting star is just reversed, and we got the high here and the low down here. The same theory applies here, that we open, rallies, push down interbar and close below the open. So all the buyers are underwater, adding pressure to them. They will ditch their positions. So a close below the low of the shooting star is when you should enter. Let me show you in real trading how a shooting star would look. Notice how the shooting star is green. So in theory it's not a perfect candlestick, but you can wait forever to find a perfect candlestick that is also having the right conditions met. And that is, it happens at resistance. Here you see resistance. We're seeing a bar poke through here, and we see one opens up after a gap, but we sell it off immediately. So we clearly see that there's resistance up here, meaning sellers are coming in. Then we are looking for short. The buyers are met. We're gonna go short up here. That's our bias. When we then see a shooting star like this with a nice long tail or wick, that's our entry. The price closes below and we can go in. It took a while before there was good profit in this trade, but the resistance held. And that's why it's so important that you only use this for trigger and not for bias. It was the bias that saved us for not getting stopped out because the resistance zone. But this is how a shooting star would be, and one way to trade it is at resistance. I just want to show you how a hammer can look. We've got a red hammer and a green hammer. And again, just to show that sometimes they're perfect and sometimes they're not. But in this situation you got two hammers in a row, which is called tweezers. And that is also a very powerful signal because we're getting a 2 times trigger in a row. We're seeing these sellers being pushed up on both bars. The other pattern is the engulfing pattern, and in this case the bullish engulfing. Price opens up here, move down and closes at the low. That means all the sellers are now making money. But what happens on the next bar? We open and when they rally, it means all the sellers on this bar is underwater, and that's a bullish engulfing. It's a very powerful reversal signal, and this is what you should really think about, is that sellers get trapped and surprised / shocked. That they see a big red down bar with people will go like, this is definitely gonna drop, this is a big strong momentum bar to the downside, and all that is completely reversed on the next bar. Just takes one bar and those people are shocked. Here's an even more bullish engulfing, because it does not just shock people like they do in the other one, they shock them even more. Why? Because we gap down the day after, and all these sellers here are seeing even more profit, and they feel that this gap down is what they really needed for this stock to drop. But they get surprised because the stock rallies and then closes at the high. So they are both bullish engulfing, but this one is just catching a bit more traders on the wrong side, especially all the one that went short at the opening because they believe that this was it. They see the big sell-off bar, we gap down, which is bearish, and people will go short even more. Here's what it looks like on a real chart. This is support. Why? Because this were resistance and it then becomes support. We see a bullish engulfing, and that could be a trigger. I don't just take this because there's a bullish engulfing. No, I take it for 2 reasons. The support, but also because it's a retracement in an uptrend. Just like I mentioned, I look for more things than just the candlestick patterns. And in this case, a retracement in an uptrend back to support. This trade up here is a 2-bar reversal or bullish engulfing at support. And we see the support coming in how? We saw a hammer over here. And what did we just learn about? That the hammer shows biases coming in. It's bullish. Even though it's red, it's still a hammer, and it shows the support coming in. So when we see our trigger, which is the bullish engulfing happening, we can go long. The opposite is the bearish engulfing. It's practically the same, except where buyers are buying this, pushing it up and close at the high. They believe this is a strong momentum bar and it's going to climb further, and then they will be shocked and surprised when the next bar closes down here. So all that bullish momentum and sentiment here is suddenly negative. And again, there's also an even more bearish engulfing where we gap up. People believe this is going to climb even further after a big up green bar, and then we close low. So the same as the bullish engulfing, just reversed. Here's how a bearish engulfing looks like. First, I noticed that there's a gap resistance, meaning we're coming up to a gap low. This is the gap. And sometimes gap acts as resistance or support, and in this case it's a resistance. We're seeing almost a shooting star here. But even better yet, we're seeing a nice bearish engulfing. And notice this, these are not big green up bars. That's okay, nothing is perfect in trading. You can wait forever for the perfect setup. Sometimes you have to be able to adjust it and trade what you see, and we are seeing nice resistance at the gap. We're seeing almost two shooting stars showing sellers are coming in. That's what we know about the shooting star. And then we see the bearish engulfing. That's a nice entry signal. If you're looking for a free trading course, we recommend you visiting our website called www.stock-market-strategy.com. Have a good day.